Bismillah ar-Rahman ar-Rahim. Welcome dear all to Oman Qatar Insurance Company MSX discussion session for first half of 2022. Maktoum, can you confirm that you can hear us and see us?
Yes, Mohammed, I can see you.
Okay. Thank you. So we're going to take you to the agenda of our today's meeting. So today we will discuss about company overview and insurance market overview in Oman. Then we will move to the third agenda, which is financial performance of past 3 years. Then we will go and speak about H1 2022 compared to H1 2021 financial performance. And then we will speak about outlook of Oman and insurance sector. Finally, we will open the floor for questions and answers. To begin with, we have myself here, Mohamed Hussain Mohamed Jawad, Chief Financial Officer and Investor Relations Officer of Oman Qatar Insurance Company, and my CEO here, Mr.Hasan Yaseen Al Lawati. And we have Maktoum Al Maktoumi, our Compliance Officer here from OQIC side. I'll move to company overview and my CEO, Mr. Hassan, will take it from here.
Thank you, Mohammed, and hi everyone. So just a quick overview of OQIC. OQIC was established in 2004. Oman Qatar Insurance Company is part of Qatar Insurance Group, which is based out of Doha. And we operate across all lines of business, insurance business, generally the general lines of insurance, health insurance, and life insurance. The company got listed in MSX in September 2017. And in terms of distribution channels, we have 8 retail branches, and we have a network of brokers and agencies. And very recently, in 2021, we established call center and online. In terms of the philosophy of the company, we believe in delivering innovative solution to our clients across all segments. And what we have seen over the past that the GWP has seen a high growth trajectory since 2019, and we expect the same performance to continue over the coming years. Now, very quickly, as I said, we are part of Qatar Insurance Group, which is a rated company by S&P and Moody's. And then when we talk about the Omani aspect of it, we see there are opportunities in the Omani market very specifically, and we would like to tap further into that. We focus on profitable growth, and that's why our underwriting philosophy is very much into growing our bottom line as opposed to growing the top line only. Like I said, again, we see potential across different segments and different lines of business, and predominantly we see a good future for medical insurance in the Omani market. In terms of the operational excellence, our customer retention has been high over the last 3 years, and then that's a very good indicator of how we operate in this market. We have built a strong network across different partnerships and suppliers, and then we will talk more when we see the figures about the performance that we have brought operational efficiency and cost optimization, which is a critical part of our business model. Now, very quickly, let me just walk you through the values of the company, and then I will read out the vision and mission of OQIC. Now, the vision that we are having for OQIC is a common vision of QIC Group, which is basically maintain our drive for growth and excellence through innovation, diversification, and responsible leadership by means of existing and new strategy, alliances, and partnerships. We aim to create the optimum framework for continuous profitable development. Now, moving on to the mission, which is OQIC specific, and our mission is to grow our portfolio in terms of both top line and bottom line, whilst remaining true to our core principle of prudent underwriting and risk selection. We intend to continue our progress towards providing innovative insurance solutions coupled with quality claim services, and thereby build a loyal commercial and personal lines customer base. I'm not going to read out all the values here. It's very much available on screen, but let me focus on a couple of them. Our company is built being built on teamwork, respect, and mutual trust. We encourage a safe workplace where employees can, anytime, come up with, ideas, solutions, or even criticism, in terms of how we can operate in a better shape. And the same goes to the customers. We value our customers. They are the main aspect of our business. This is the reason why we are into the business. And we deal with the clients, or we view them basically as a trusted partner. And therefore, looking or viewing them as partners, we value constructive feedback and comments. And of course, honest criticism is always acceptable, and we always take that into consideration on how to further progress and grow efficiently and effectively. We have 7 board members. The chairman is His Excellency Khalif Ahmed Al-Manai. The deputy chairman is Mr. Musallam Mahad Ali Qatal. Is also a member of the Investment and Nomination and Remuneration Committee. Mr. Salim Al-Na'i, who is a board member and a strategy and investment, as well as Nomination and Remuneration Committee member. Mr. Ali Saleh Al-Qadana is the chairman of the Nomination and the Remuneration Committee. We've got Mr. Tariq Marzouk Al-Shamlan. He is the chairman of the Audit, Risk and Compliance Committee. We have Mr. Mohamed Al-Kharousi, chairman of Strategy and Investment Committee, as well as a member of the Compliance, Audit, Risk and Compliance. And then last but not least, we have Mr. Saeed Al-Muhannadi, who is a member of the Audit, Risk and Compliance Committee, and also part of the Remuneration Committee. In terms of the management, proudly, the top management is 100% Omanized. So myself, Hasan Al Lawati, the CEO of the company, and then we've got Mohamed Al-Duri, who is Senior Manager, Clients and Operations. On my right, Mohamed Jawad, who is our CFO and Customer Relationship Officer, as well as Board Secretary. And we have our colleague, Omar Al-Shankari, who is heading our HR and government relationship. A brief comment on the insurance market, we have picked here precisely motor insurance and medical insurance, which we believe is two important lines of business for OQIC and for the money market in general. In terms of motor insurance, of late, and let's say post COVID-19, we have seen increase in motor accident frequency, and particularly increase in cases of death and severe bodily injury. This has resulted in high claim for the industry as a whole. Not only that, but then we all know that the frequency of heavy rains and floods in Oman over the last 10 years, perhaps even slightly more, we've seen these occurrences increasing, which is putting strain on the claims in the industry. Now, one of the important kind of implication of this, basically, the reinsurance market has reacted negatively after these incidents, which has resulted in an increase in reinsurance costs. And this is very true across the industry. And then when COVID-19 took place in 2020, because of the lower number of cars on road for different reasons, the competition increased, stiffened in fact rigorously. Then most of the insurance companies got into a price war, which is of course not sustainable over the long term, and the market started to apply some correction into the pricing. Now, moving on to the medical insurance, again, this has an impact or kind of relevance to the COVID-19. So post COVID-19, we've seen higher utilization of healthcare services by the public, which was something very normal. As you know, during COVID-19 years, the 2 years precisely, there was less utilization of health insurance. Now, the economy as a whole got under pressure, during COVID-19 and post COVID-19 as well, and this is also true for other countries globally. And this has, resulted in health insurance in Oman, getting impacted by, clients reducing benefits, mainly to incur lower cost of the insurance. And the same case with motor insurance, competition stiffened, and there is a lot of price kind of focus by the clients as well as by insurance companies, which has resulted in increasing in loss ratio. Having said that, for OQIC, we remain focused on prudent underwriting strategies. We're very careful when it comes to risk selection. We're not tapping into these lines of business just to grow the top line, but also focus very much on the bottom line, which we can see later on in our performance. With that, moving on to the financial performance, I'll hand over that to Mohamed to walk you through.
Yeah, speaking about OQIC financial performance for the last 3 years, we can see that OQIC focused on having stable gross written premium and underwriting income across 3 years. So we can see that 31 million was our GWP in 2020-2021, and we reached to 19 million in first half of 2022. In terms of underwriting income, also we have reported almost 2.8 million across past 2 years, and we reached to 1.7 million in first half of 2022. When speaking about profit after tax and investment income, we can see that our profit after tax is growing strongly by a percentage of 50 to 60%. So from 1.3 million in 2019. We have reached to 3.1 million in 2021, and now 1.9 million in the first 6 months of 2022. The same scenario applies to our investment income. It was 1.3 in 2019, where it reached to 3 million in 2021. And for first 6 months of 2022, we have reported 1.7 million, despite strong pressure on equities market across the globe. Moving to a summary of our financial ratios and to give a good understanding to our investors and shareholders, we have reported a good return on equity and return on investment across past periods. So from 8% return on equity in 2019, we have reached to 15% in 2021 and 9% for 6 months only in 2022. ROI also was positive from 5% in 2019, which got doubled in 2021 to 10%, and now for 6 months only we have reported 6% return on investment. These figures are very positive considering the challenging environment here in Oman. Going to a combined ratio and loss ratio, which are mainly insurance related ratios, we have reported a healthy technical ratio, which is almost 60% in terms of technical insurance ratio. And we have maintained a very good expense ratio, which is almost 30% in 2022 first 6 months. This shows how management is committed toward the positive performance of insurance of the company. Going to loss and retention ratio, we can see that loss ratio of Oman Qatar Insurance dropped from 62% in 2019 and reached to 54% for the first 6 months of 2022. And this is very positive ratio considering the market. And we can see that net retention ratio was 22% earlier, then it got increased gradually till it reached to 29% in 2022 first 6 months. This clearly shows that the company gradually tried to build a retention book here in Oman and keeping these premiums. Going to other important details about the company, the first graph shows the net asset value and market share price of OQIC. So we can see that in 2019, the red graph showed that 92 Paisa was the share price at 2019, 31st December, which doubled to more than double actually to 214 Paisa ending 2021. So this is a good result and positive impact to shareholders. And we saw 196 Paisa for the first 6 months of this year. In terms of net asset value, it's also moved toward a positive number from 165 Paisa in 2019, 281 Paisa 2020, and again 208 Paisa and finally 217 paisa in first 6 months of 2022. We can see that the net asset value and market share price is going gradually up, and this is reflecting a good position of the company. In terms of total employees and dividend, we have paid 7% dividend last year, and we are maintaining a good Omanization ratio of 85%. Going to speak about first 6 months of 2022 compared to 2021, we can see that in terms of gross written premium, we have exceeded last 6 months of 2021 by 20%. So we have reported 18.9 million of gross written premium compared to 15.8. Mainly it came from fire, motor, and marine cargo business. And that took us to a 6% increase in our net underwriting income. And worth to mention here that our high retention ratio and our work to increase our retention ratio resulted in increase in our net underwriting income. Going to our G&A, general and administrative expenses, we can see that we have reduced our expenses by 8%. And this reflects management efficiency and cost reduction measures which worked successfully. Then our net profit after tax reduced 5% from 2 million to 1.9 million, which is 100,000 riyal, mainly coming from a bearish market move. So we have noticed that equity market went into a negative and bearish area. So we have lost more than 200,000, almost 200,000 riyal in the market, which were recovered post 30th June 2022. When we consider our gross written premiums, we can see that OQIC is retaining customers. So we can see there is no much difference in our GWP mix. We can notice that retail business increased by 3 to 4%. And our second thing is property, where we see 50% of our gross written premiums are coming from property and energy products. So engineering product. In terms of profitability, we can see the same area here between H1 2022 and H1 2021. Going to investment details, OQIC investment portfolio composition is, if we can see here, we are focusing on fixed income and bonds and equity. So our fixed instruments are considered by 60% of our investment portfolio. So 60% are going as a fixed income instruments and 40% equity investments. In terms of our income composition from these investments, we can see that interest income and dividend income and realized gain and unrealized gain from equities. So the ratio somehow, if we focus on the green area, it went it was 57% in 2021 and went to 41% in 2022. And that is, as I said, due to the bearish equity market. The company is focusing on moving toward fixed income more to secure sustainable interest income. Finally, when we speak about the outlook, considering the current oil prices in the economy and government moves towards diversification and attracting foreign investors and country rating, which moved recently in August from BB minus to BB with a stable outlook, this will create inflows to the country, and we expect to see new investments coming to Oman, and which will increase Oman insurance market and Oman insurance book. So that will bring a positive vibes to the insurance sector. In terms of life and medical, we are expecting to see a growth in this portfolio, especially after introduction of mandatory health insurance scheme, Omani, which we are expecting it to happen very soon. Speaking about OQIC solvency position and lien position, we can see that the red graph shows that the red bar shows the required solvency requirement from authorities, and the blue bar show what is OQIC position, and we can see that almost we are having a double solvency than the required position by Capital Market Authority. In terms of lien position, we are always keeping a good position of liens with CMA to cover our insurance operations. This is for today, and I hope the meeting was not too long and it gave a good impression and information about the company, and we will open the floor for questions and answers.
Thank you. Any questions? Yes, Mission.
Hi, good
You can
afternoon.
unmute.
Good afternoon.
Good afternoon.
Yeah, this is Bishan Bhalla from Vision Asset Management. Thank you so much for the presentation. It was quite insightful. I had a few questions. I'd like to start with sort of GWP growth. We witnessed, you mentioned that you saw some growth in GWP, in the marine segment, motor segment in second quarter, of 2022. Going forward, what would be aspirations on sort of a growth in GWP in terms of top line? Are you comfortable with what book you write, or what are your aspirations for just Oman Qatar on a standalone basis?
Thank you, Mission. I'll take that. So yes, you're right. So this is what we have so far recorded. The growth has come from these lines of business. So from now until the end of the year, we are focusing on the same lines of business. And then the emphasis will also be more onto motor and health insurance. So we expect to see a growth in the GWP by end of the year when compared to last year.
Okay, noted. Right. With regards to sort of a operating margin or combined ratio, the company's done quite well to sort of deliver an operating result in addition to excellent investment income because of equity gains. What would be an aspirational combined ratio for the company?
Sorry, what will be the combined ratio for the company by end of the year?
What would be in general, not just end of the year, but in general, what is a target combined ratio the company would like to operate at?
Yeah, so if we look at the history, we've been profitable, which is below 100%, except for 2019, and we expect to be below 100%, and our target is not to exceed 93-94%. So it's too early to comment how we expect it to close the year. Again, there's a lot of uncertainties, but we have started very well this year for the first 6 months, even when compared to last year. So again, 89% is very optimistic, for insurance. We still have 6 months to continue, but we expect to be, around that. We hope that we don't exceed 95%.
Sure. Now coming to the investment book, you just showed your current split, and it's around 35 to 37% is equity, and the balance is fixed income. Now, we witnessed throughout last year as well as in the first quarter of this year, Oman Qatar has clearly gained because of the higher equity exposure, and so far the trend suggests that Q3 also looks to be a good quarter for equity gains. What would be a target equity book going forward? If you, as you mentioned, you would like to shift towards fixed income. So what would be a target fixed income to equity split on your investment book going forward?
Always as an insurance company, we consider a stable return from investment. You should focus on fixed income instruments. But in fact, everybody knows that equities are yielding much more than fixed income. For us as OQIC, maybe we will consider to have 70-30 breakdown of fixed income compared to equity.
And we will do that gradually, so it's not the intention to do it in one go. So it will take us, a couple of years once we get into that position. So the idea is not to jeopardize the income we are generating from investment and mainly from equity in one shot, but then we want to build a more sustainable kind of book. So our interest, our focus and appetite for equity will remain there, but then in a slower manner than what we're doing now. And we have seen, the impact in June. June was, not a very good month when it comes to equity, despite showing profits there, but lower when compared to last year. However, having said that, again, I don't want to comment much about, the July. But July, we saw a different picture altogether than June. So markets picked up. and whatever we lost in June, a bit in May and mainly in June, got recovered in July.
Noted. Yeah, understood. My next question is with regards to sort of the merger with Vision Insurance. You made your announcement. If you could just provide us with a quick update on where things stand, and then I can ask further questions on that.
Yeah, sure. So there's not much update that we can share at this stage, Vision. As you know, there was a market announcement done by both of us, OQIC and Vision. And back then we said that we are in a process of exploring that opportunity. So indeed, there has been good progress in terms of the discussion and dialogue and different activities between the two entities. But then we have not yet reached into a further stage. So I would expect soon, perhaps let's say Q4, we'll have a better clarity on where we stand. So it's immature for us to comment on where we stand now, but still I can guarantee that it's more into studies and exploration phase.
Understood. Now, with regards to sort of entering into this transaction, what are your thoughts on the synergies or the overall strategy behind this consolidation? I mean, we've always spoken about the need for consolidation in the sector, and I'm glad that you've taken that initiative. But sort of what is your strategy and what synergy do you hope to achieve from this transaction?
So if I give a kind of a broad answer at the very beginning, and then maybe I'll dig a bit deeper in my answer. So it goes beyond, it's quite evident that, market needed consolidation, through M&A activity, not only in Oman, but also we have seen that globally and specifically in the GCC. So we've seen a lot of such kind of, deals happening. And you've seen in the beginning of the presentation that there are various challenges that the insurance industry is facing, be it stiff competition, be it the change of dynamics of risk, global. And we also saw that when such global incident like COVID-19, these pandemics and epidemics are creating a big deal. For insurance companies. So growing, having a higher capital, higher premiums, and more retention will make the company, any company, more sustainable for future growth. So there was definitely a need for such kind of kind of concentration in the Omani market, and OQIC wants to further show commitment to the Omani market, and that's why our interest in getting to such merge, with in this market. Now, talking about Vision specifically, we see great synergies between the two companies. We've seen that the philosophy of the companies, or let's say the focus area, is similar in terms of where they focus and where we focus, and then we feel that there's a good value that we perceive. For both of us, with this deal, should it happen.
Okay, understood. My last couple of questions would be, what would be, we've seen an improvement in ROE last year. What would be a target ROE for Oman Qatar, given that you would be moving over a period of time towards more sustainable fixed income on the investment book and the aspirational, combined ratio. So what would be a target ROE for Oman Qatar?
Steve, Vision, there is one fact which is coming here. As you know, when a company enters into such transaction, there will be also transactional cost. These elements are there and it is factor, but always we are looking for a 3% increase year on year on our ROE. So we are targeting a 3% increase compared to 2021.
Understood. Okay. That's good to hear. And would that be a trend going forward as well?
Excuse me?
What would sort of going forward, say in FY23, FY24, what kind of ROE would you target?
It's not a comment on that at this stage. Insurance, the long-term planning for insurance, is quite tricky. Every year comes with its own incidents. Now the philosophy doesn't change, the strategy doesn't change. We are, stepping. Definitely, you have seen that the performance of the company, has improved, over the last 2 years, and we found, areas where we can, either bring some efficiencies, and that will be cost cutting. If you remember the slide of the headcount, you've seen that there's no much change in the number of staff in OQIC. And despite all of that, if we do a small comparison between the number of staff of similar size, company within the insurance industry, you will see that we are quite on the lower side, and because of the efficiencies we have, the systems, technology that we have invested in. So we will keep an eye across all of these areas and find areas where we can keep our technical performance as well as investment performance very much intact. And we focus. So difficult to give a clear answer where do we see assets in the next 2-3 years. But philosophy doesn't change.
Understood. My last question would be with regards to dividend payment. We've seen a slight increase last year. With higher profits, would you still like to sort of keep capital, or would you target a higher payout as a reward to shareholders? That's the last question.
So as you know, the dividend kind of decision will be made by the board of directors, and what I can comment on is that the intention to get into such merge or get into a transaction in the money market, obviously was not something that came out of blue or recently. We've been planning for that. So despite that, we decided last year or the board rather decided to pay a higher dividend, despite having this plan in progress. So we would like to further invest into the business, right? And then that will be something that we impact. But I don't see, and the board as well, that we will be going, lower than what we have paid last year. As far as I can comment at this moment, but definitely a decision will be taken by the board at the right time.
All right. Thank you, gentlemen. If there are any further questions, I'll come back later. Thank you so much. Wish you all the best.
Thank you, Bishop.
Thank you.
Any other comments, questions? Yes, Joyce.
Hi, good afternoon, gentlemen. Thank you for the presentation and the discussions. Just a few questions. You just mentioned that your aspirations is for a combined.
Sorry, just to interrupt you here, Joyce. Can you first introduce yourself, please?
Hi, this is Joyce. I'm from United Securities.
Okay.
So just about a follow up on what you said about your combined ratio. You mentioned that you are planning for 95% or keeping it just below 100, and 95% is your aspiration. But what I'm seeing is right now you have an average loss ratio of around 55%, and at the same time, the underwriting expenses in terms of your commission income is coming down, is increasing, but at the same time, we are seeing that the reinsurance commission is coming down significantly. Has come down significantly in this quarter, especially from almost 8% in first quarter to around 3% in this quarter. So how do you manage these things? At the same time, what I'm seeing is your operating expenses also hasn't changed significantly over this period when it comes to this year in quarter, or when we look at it from last year also. So what are your strategies to achieve this kind of aspirational goals?
Right, thank you. So just let me clarify my understanding of your question. So you're asking about our aspiration of having a positive combined operating ratio, keeping it below 100% and around 95%. And then your question was, or your point was, you've seen a lower reinsurance or commission, right? And at the same time, we're seeing improvement in our expense ratio, predominantly from 42% last year into 30% year to date. So, and you want to comment around this? Am I right?
Yes.
Okay, very good. So good point, and all of these points are linked together. So what the strategy we have adopted this year specifically is that we have identified some lines of business where historically we have seen there are good underwriting income, but we have been a bit kind of let's say conservative in getting our skin to the game and having some high retention. So what we did basically after studying, in fact, I'm not exaggerating, we have done a thorough study for the last 10 years performance, and then for each portfolio to understand, the hikes and of these kinds of business. So what we did, we decided to have more retention, risk retention, and obviously when you are having high retention, you are compromising on your reinsurance income, right? So that is one of the impact. And if you are asking which lines of business we are focusing on, I would say that it's travel insurance, it's medical insurance, and liability insurance, WC insurance as well, where we have seen that there are potential. So that's one. And once you're having higher retention, obviously you are generating a higher net earned premium, right, eventually. And these expense ratios are very much linked to the net earned premium, as you know, and not to the GWP. So that was part of why our reinsurance income has gone down, but at the same time, our expense ratio has gone down at a faster pace than the income generated from the reinsurance. But again, talking about the high retention, this also results into higher IBNR and higher reserves that we have to keep aside. And this also, that's why you don't see much improvement in the claims ratio, because despite good performance, we are doing a right reserving. So we have previously we used to do the actuarial review once in a year, and then this year we are doing it twice in a year, just so that we don't miss any opportunity. Did that answer your question, Joyce?
Absolutely, yes, fully. Thank you. Mr. Hassan, another question that I have is on your investments. Your investments, what I was going through your annual report, and then I found that it's very much concentrated. So since you are operating in a very regulated environment in terms of your investments and its concentration risk and everything, how do you manage this, and what are the challenges that you see in managing these investments, especially given the fact that your investment in bank Muscat is is very much close to the threshold levels that is allowed by the CMA. So what's your strategy there in terms of managing the investments with a higher concentration?
So when it comes to investment, maybe Mohamed can comment later. So when it comes to investment, our strategy is to have 2 to 3 years view of any security we want to get into. So we are not into day trading or swing trading or looking for a short-term gain. With that view. So we with our internal team as well as within the group philosophy of QRC, we do a lot of review about these securities, and where we feel that there is a overall sustainable kind of view of that investment for the next 2 to 3 years, we tap into them. However, in 2022, in the first 6 months, or precisely in May and June, there were some of the securities based outside of Oman, very much within the GCC, where there has been great reduction in the price, and then we had a committee and discussed thoroughly about what should we do when it comes to that, and then a decision was made that let's exit and then repump that money into something which we feel will bring more value over the next 24 months. So that's the general philosophy of what we do. But if you're in our answer to one of Bishop's question, we said that given that given that volatility, right, and volatility could be upwards or downwards, right? So upwards we gain, but downwards then creates a huge vacuum in our income. So that's why we want to, slowly and gradually move into a more, less risky kind of investment, and that's into FDs. Recently, we also got into government bonds, which was not something that we did not tap into previously, but then this year we got into the Oman government bonds, the US.
So do you see any, what are the challenges that you see in managing the existing investment, given that the concentration is slightly on the higher side and you're hitting the 40% limit?
Yeah, Joyce, see, the challenge is common across all entities having local and foreign equities. We can see the fluctuation happening in the market. You will close June with a negative figure, then you will close July with a positive figure. So it's mainly an active management of equity position. So, and this is our strategy. We are not just investing and keeping. We are actively managing our stakes. So day to day, we are analyzing the stock, and we might sell, we might keep, we might buy more. So it's not just a sentiment of buying and keeping. We are actively managing our stocks. And the challenge is here. You cannot predict now. See, Feds are increasing rates. Suddenly, people will say they stopped increasing rates. Market will recover. Suddenly, again, they will tighten the monetary policy. Again, markets will fall. So these kind of fluctuations are the main challenge which we are suffering during this period. And I believe and you as an asset working in United Security, you know more than me the current fluctuations happening. So having a book of 40% in equity will open you to this kind of challenges of fluctuation, maybe.
Mohamed, as just for my knowledge, see, if you are hitting more than 20% of your portfolio, a single stock, let's say Bank Muscat, which is one of your key investment, if that hits more than 20% of your portfolio, are you forced to sell the excess amount, or can you keep it until for let's say for end of month or something like that?
You mean regarding the minimum, the
maximum
investment guideline?
The maximum, yeah, the maximum allowed.
You mean the 15% maximum?
Yeah.
Yeah. See, we are very clear on this. We are always below 15%, and if we reach to 15%, we will immediately sell. We will not wait. We want to comply with regulation. See, investments as an insurance company, our core operation is insurance, so we cannot jeopardize this with violating even for 1 day. So we will sell immediately if we discovered, or if any bonus share was given, or anything happened that took us above 15%. Anyway, our strategy is to have a reasonable buffer between our holding and the CMA maximum requirement, which is 15%.
Yeah, got it, Mohamed. But the question is, at the technical requirement, will we be forced to sell, the moment we hit that threshold, or?
Yeah. As per CMA, you are forced to sell as per regulation if you hit 15%. Okay,
got it. Yeah. Thank you very much. Thank you very much for the answers, and wish you all the best.
Thank you. Appreciate it. So, do we have anybody else want to ask, or shall we conclude the session?
Okay, so thank you, everyone. Very happy to be with you today and discuss about OQIC. Hello. Yes.
Yeah. Myself, Shahrukh. I am from U Capital.
Okay.
Yeah. Hi. So my question is considering gross written premiums, you mentioned about various sectors you have been. So are you planning to include any new sectors under your insurance segments, or you want to focus on the old structure, like old segments that you have, or you have like considering any recent growth in some sectors in one you are planning that we should expand our line of business?
Okay, good question. So, as you know, we are a composite insurance company, so our license is across all lines of business. So, in essence, we are almost into all of the lines, all of the traditional lines of business. Be it property, casualty, energy, marine, personal lines, retail, life as well, and medical. So, in terms of finding opportunity, answer is yes. We are always trying to find areas which are niche and untapped into where we feel there's a potential. So very recently we got into the travel insurance. So over the last 2 years we found that this is an area that we would like to further explore, and it has worked well for us. So that was something fun. Maybe into the retail segments, yes. There are certain lines where we are not currently focusing on. Personal accident, for example, is an area that we are currently studying. Because these lines of business require a very clear strategy when it comes to distribution channels. It's not like you come up with a product, file it with the regulator, get the approval, get a reinsurance strategy around that, and then sell it. So it requires a lot of capability into getting into the right channels. So that's being studied by the company. So that's one. Now, if we are talking about a more risky lines of business and which are being emerged, globally, and let me pick one example. For example, cyber risk insurance. This is something that we keep hearing, almost on a daily basis, or reading in the news on a daily basis. This is something which is highly risky, very no past experience that global market has built so far. And we've seen large insurance companies who have decided to get into that, provide high capacity, and over 2 years span of time they withdrew these capacity. So these lines of business, be it trade credit, be it cyber insurance, is something that we don't want to be aggressive on, and if at all, the retention would be almost nil. That's not something that we claim to have expertise in. So to give a more precise answer to you, Sharon, is that when the lines of business that we understand very well, we will continue focusing on. And when we feel that we can increase retention, we will go and increase our retention and put more skill into that game. The lines that we are not very sure, happy to consider, happy to front, happy to build some experience, but not get aggressive and not exposing our bottom line at all. So it's yes and no. Yes into open to the ideas and finding solutions, which we are having a dedicated team doing that. And no, in terms of getting into a new line of business aggressively.
So, and one more question. So, coming to retention ratios. So, let's say if you're focusing on any life, so which line of the insurance segment among you do you focus as the higher riskier one?
I've given some highlights in my previous answer, and again, due to some competition, I don't want to get into very specifics. And I'm happy, to meet you and share some thoughts there. But I don't want to get into the specifics of where do we see higher risk and where do we see opportunity. So excuse me for that.
Okay. Okay. And don't you feel that if in future you'll focus morely on the retention ratio, let's say higher retention ratios, so that will lower down your margins?
Yeah, so when we speak about a higher retention ratio across the portfolio, so there are two ways to do that. A, change in the portfolio mix, right? So obviously there are lines of business where we have higher retention, and to pick an example, which is true for everybody, is motor insurance. So one way to do is focus on the already high retention lines of business, strengthen our underwriting, guidelines, and further grow that kind of business. So this is one way to do it. Another way is, finding lines of business where we feel, historically, and we can forecast future to be, to continue to be profitable, and then utilize our treaty more and increase our retention. So these are two ways where we look, we explore into how to increase the retention. Now, by increasing retention, of course, it will not go into high levels in one day. It is just more gradually, carefully looking at that. We don't want to expose ourselves, at once.
Okay, thanks for answering my questions.
Thank you. Okay, so almost an hour so far. So, ladies and gentlemen, if there are no further questions, we are officially closing this meeting. Been a pleasure, talking to all of you. Thanks for your questions, and we'll see you.